So we are, of course, here again with Good News Monday with Larry Goldberg. And Larry, any good news today?
Well, the stock went up.
There you go. That's it. No, I'm kidding. We'll have lots of good news in the show today. But I had a few comments, Larry, from our Saturday morning Kathy Wood analysis that suggested we were all doom and gloom. And I know that my show is perceived to be a place of good news and happy talk. However, it would be doing a huge disservice to not speak the truth based on the data as presented. So I have to take the risk of losing a few folks rather than whistle past the graveyard. Make sense to you?
Yeah, and here's the good news about that all, Randy. Bad times are some of the best opportunities that any of us can have.
Yes.
It's out of bad times that real fortunes spring. The good news, I'll let you in a little secret about recessions. Generally, they're very short.
Yes.
And, we've been talking about being in a rolling recession. So
Right.
in a way, we've kind of lived through a lot of the bad news.
Yeah.
Believe it or not. And Tesla really paid the price back in December of 2022.
Mm-hmm.
So, or the year of 2022. So, I think that what we're looking at as far as Tesla is concerned is some really good years coming up.
Mm-hmm. Yes, I do too.
I think we're going through a very rough time in our economy, a very confused time in our economy. You only have to look at the news to see the confusion in the times. Some people think good times are coming. Other people think that, like I do, that we're in this recession and it's going to, reach bottom in the next quarter or so. But either way, I think this is a great time for Tesla investors. I personally am using this opportunity over this period of time, not today.
Right.
And it's not investment advice, but I'm using this opportunity to add to my Tesla holdings. So I think it's great. I think it's a great time. And I've lived through several recessions, and every one of them, no, not everyone, but many of them have proven very profitable.
Yeah. Yeah, I was thinking about earlier today. I was trying to come up with a metaphor, and I thought of my old Dodge. I used to own a whole bunch of Dodge Darts. I had a used car rental car business, and I had
amongst your many others.
And I had these old Dodge Darts, and you could have taken one of those Dodge Darts out on a off-roading and driven it around like crazy, and when you got done, it would still probably have driven another 15 miles, but it would have had a lot of rattles and problems, and maybe some of the tires would have been problematic. Well, that's how I see recessions. Recessions are a time of, you got to tighten the bolts and you got to replace the tires, and you probably have to lay off a few people, and you've got some companies that need to go out of business because they're just not economically sound. And then when the recession is over, the economy is ready for a try.
I'd want you to rethink that just a slight bit.
Okay.
Not when the recession's over. In the depth of the recession, that's the opportunity. That's the opportune moment. You have to find the gap that the recession has created in the marketplace, in your field, in your product, and you have to really laser focus, because that opportunity comes around so seldom.
Right.
And, so it's a deja vu moment. For me, it's recognizing that or reminding yourself of that precious moment where, wow, this opening suddenly was created.
Yeah. Indeed. You're 100% right. So, Larry, let me have you sit on the sideline for a moment while I rant, okay? And then I want to hear what you have to say about this rant. You see, I've been reading that Cybertrucks are getting in accidents and they're getting stuck in the snow. and they're getting into trouble off-road. And then Teslas are getting recalled, thousands, quote unquote, recalled, and robots are attacking employees, and strikes and miscellaneous other employee issues are taking place at Tesla facilities all over the world. And then random Teslas are in non-faulted accidents, and Tesla is cheating on advertising range, and BYD is passing Tesla in unit BEV sales, and then so much more. And then now information that was contained in Elon's biography months ago, having to do with Elon's use of drugs, is blown up by the Wall Street Journal to appear that he's a huge partier or a drug addict. Meanwhile, there's almost no coverage of the breakthrough nature of the Cybertruck, the incredible reviews, the Generation 2 vehicle version of Optimus, the Model Y becoming one of the best-selling car in the world, or any nuance ever appearing in the negative articles. What do you think?
Tesla must be bankrupt. Elon must be in, some sort of recovery mode. I mean, SpaceX, they're closing down. It's really terrible.
One could get the impression, Larry, that there's bias in the press. But Gary Black says that no self-respecting journalist or editor would ever allow their prejudices or their advertisers to affect their decision.
Right. And what about Holmar's blog? Holmar's blog had the best piece today of all. So stock is up, and he quotes, stockholders love being run by a drug addict,
That's right.
I love him.
Yeah. Well, I just think it's just amazing. I think that I've come to this conclusion that the mainstream press, which is probably on their way out, okay, I think it's probably just a matter of years before the mainstream press will not be the powerhouse that it is. But it continues at this moment in history to be more powerful than X and all the YouTubers combined. And so they have this power to withhold news, to manage news, to write it up the way they want to write it up based on their prejudices. And nothing that Gary Black is going to say to me about that is going to change my mind.
Yeah, I think that Gary misses the point. I really don't believe that an advertiser comes in and writes a check or comes in and bends or twists an arm. But people know who pay their checks, who pay their salaries. And right now, in the press, in the media, times are very, very tough. People are looking over their shoulders. Jobs are becoming less and less available. Even, celebrated writers have their careers, under scrutiny.
Yes.
So I think he's right. I don't think there's this out and out, arm twisting or, cabals of, some dinner party taking place where money changes hands or favors are requested or arms are twisted. I don't think that happens. I think he's right in that regard. But everybody knows who's paying the bills.
Right.
And when your job is under pressure, you pay attention to who the shareholders are and where their fealty lies. So to say that that's not the case, you'd have to be crazy, because if you just simply do, a statistical analysis of what's going on in the press, you have to say something's going on.
Something is definitely going on.
So you can't say, oh, well, they don't have a PR department.
Yeah.
Oh, they don't have an they don't have a PR department, so they can't reach somebody who can't. I have never heard of a case where a PR department has been able to, really make a change in a story that, a headline level story that the paper wants to run. In fact, in a way, it's kind of like feeding the beast.
Yeah.
So I don't buy what Gary's selling. I understand his point, and it's well made, that there is no money that changes hands, or there isn't, any contract that's implied. There isn't. But the press is under the pressure that makes the job of these journalists very clear. Otherwise, why would these national organizations
Spend them.
all have the same political outlook?
Yes. Yes.
Why?
Yeah. Yeah.
Why? What would motivate a journalist to comply with a political viewpoint if that journalist, A, wasn't hired for their political viewpoint,
Right.
or
Right.
didn't want to comply with the viewpoints of the shareholder, of the senior management, the shareholders, the powers that be.
Exactly.
The same thing applies in terms of advertising. So I get off the rant. I think that what Gary says is factually correct, but I think he's missing the main point.
Right. Right.
I cannot for the life of me understand the thrust of these articles in the Wall Street Journal. Listen, I'm a subscriber to the Wall Street Journal.
Mm-hmm.
And I read them, and I'm intimately knowledgeable of what's happening at Tesla because of the community I belong to.
Sure.
And what they write in that paper has nothing to do with reality.
Yes.
Nothing.
Yes.
And this is not the article I'm worried about.
Mm-hmm.
You go back, 9 years.
Sure.
And it's full of this stuff.
Right. And not just the Wall Street Journal, obviously, so many.
Yeah, the Wall Street Journal is actually the least,
right. One of the least, yeah. Yeah, on the other side, Larry, I will tell you that I have written hundreds, maybe even thousands of PR releases in my career.
Yeah.
And I've hired, I've had an agency work for me, and I have been that agency writing those PR articles for other companies. And I know that industry trades are not the same. Industry trade magazines are not the same as national press, but there's not that many. There are similarities, and I have also written PR releases for a political project that I was involved in for a year or so back in many years ago. And I will tell you that, of course, these people have biases. Of course, they're human. And the biases sometimes will just be, I think in the case of these automotive situations, it could be just the bias. It's who they hang with. It's who they go to parties with. It's who they go to the beach with. It's who they've been talking to for years about these subject matters. Just that much, even if they never go to a party. Yeah.
There is a culture. The culture is informed by all the above. You're absolutely right. So the GM, ad person goes to the parties, and and the writers are there, and they know who's there. And they look, there is no Chinese wall. That went away a long time ago. There used to be such a thing.
Mm-hmm. Yes.
Such a thing doesn't exist anymore.
Right. So on another subject, Electric is reporting that according to the latest estimates from the Kelley Blue Book, the Texas-based automaker called Tesla increased its deliveries in the U.S. by 25% last year to over 650,000 vehicles. And with that increase, Tesla now holds a 4.2% market share of the entire auto market, not just of EVs, but of the entire auto market. In fact, I think the EV portion, they might have increased their share up to in the 67, 70 range. I forget now. I saw that the other day. I forget. Anyway, it might not sound like much at first, but the auto market is extremely fragmented with only a few capable of having double-digit market share in the US. Therefore, it is enough for Tesla to now surpass well-known established brands like VW, BMW, Subaru, and Mazda. So the increase worldwide, Larry, was 38%. But the US was only 25%.
Right.
This is why I think they really need to get the advertising going. I mean, this is not, we need to get.
I don't disagree with you. I mean, I've been aligned with you on that for some time. We've disagreed with Elon about advertising. It looked like he was gearing up for it, and, we hope that he does, because, you've made the point frequently that the penetration into the Midwestern states or the middle of the country is not that great.
Right.
And the penetration into like even in North Carolina, we have a massive Tesla fleet here in the triangle, in the Research Triangle. There's a massive fleet in Charlotte, North Carolina, and maybe in one or two coastal cities, but that's it. That's the size of it.
Yeah.
And so you're absolutely right. I mean, it seems that there's so much opportunity. And I'll give you a little thesis if I can, just
Sure. Absolutely.
interrupt your thinking. Tesla are lowering the prices. I just tweeted this. Tesla are lowering prices. People say it's because they can't sell or they need to boost demand. I think it's a strategic move. I think they're moving the 3 and the Y into a more popular category. I've spoken about this before, to expand the TAM of the vehicles, pending the introduction of the next gen vehicle, because they have to. They've got, 4 hungry factories to feed, very large factories, and they need to feed them. And they can't feed them with a product that competes with BMW or Mercedes-Benz, which is where their product was positioned.
Right.
Moving this down, it's a very strategic move, because it's saying to people, guys, EVs are no longer more expensive than gas cars. You don't have to take the savings into account. Look at the numbers.
Right.
We'll sell you this car for less price than you'll pay for the Accord, or that you'll pay for the RAV-V, equal or less, or whatever it is. So it's a strategic move. It's a move to reposition the car. Now, doing that strategic move, I think, is the right move. I think it's a very strategic move. But doing it without advertising kind of loses the sting.
It does, yes.
And so I all those words to agree with you.
So Motor Biscuit, I'm not sure I've ever heard of Motor Biscuit before today, but they issued a shocking report today. I was really blown away. This year, Super Bowl commercials came with a steep airtime price tag of $7 million for a 30-second spot. Ford, GM, and Stellantis have shared that they will not be marketing during the Super Bowl. All three made statements reiterating that their business interests were greater in the savings of that money than the event's guaranteed eyeballs. What do you think about that? I was blown away.
I did the math on that. It's a couple of hundred Teslas. But when you do the math on the gross profit on those Teslas, you'll need, a couple of thousand Teslas to be sold. I don't think it merits it. The only time it merits it is if you've got a massive strategic opportunity that you want to announce or that you want to kick off.
Yeah.
I'm thinking about, I always cite the Apple commercial.
Of course, yes.
I mean, what a piece of brilliance, and it was very strategic at a very strategic moment. So, no, I'm not a great fan of Super Bowl ads. I really am not. But I'm a fan of advertising.
Right.
So, a Super Bowl is not going to sell it directly 7,000 or 2,000 Teslas, but what it may do is kick off, a major ad campaign of many millions of dollars.
Right.
Many more than $70 million for a major, opportunity.
Exactly.
Tesla doesn't need that. I think what Tesla needs is really, to get phone calls motivated in the middle of the country.
Right. Yeah. A concentrated strategic advertising campaign aimed at those. And somebody said to me the other day, they should also aim it at women, because we've seen a number of reports saying that the women are the ones that are most concerned about the range anxiety. So they need to be made aware that on a Tesla, that is just not an issue.
We have such great women influencers.
Yes.
Who are so knowledgeable about Teslas and can speak with such eloquence on the subject. It would seem that there's an opportunity to put them front and center, for people to see, and not just on X. I mean, on a wider, on a wider market,
Yes.
and make them available to newspapers and so on. I mean, I saw some reporter did a trip from Chicago to the East Coast and made up they had to stop 8 times. I mean, I've done that trip. I mean, I'm a road warrior. I've done that trip. From Chicago to the East Coast, you do not need 8 stops. And
Right.
if you're doing 8 stops, then you don't know what you're doing. So how to get through to these people, I don't know, but you know.
Yeah, I get it. I get it. Well, if we take a look at the broader news about the economy, Market Watch has this out. Total consumer credit rose 23.7 billion in November, up from just 5.8 billion increase in October. Now, this is really old information. I don't know why they can't get it a lot faster to us, but that translates into a 5.7% annual rate. So the number looks huge, 23.7. But when now you change it, you say, well, that was up 5.7 going into the Christmas holiday, and it's not seasonally adjusted. It doesn't seem quite as big. But it was the biggest gain since when? Oh, November of 2022. So that makes total sense.
Goodness me. Yeah.
Yes. So economists had been expecting an $8 billion increase. So this was obviously much, much higher. Anyway, thoughts with regard to the consumer credit numbers out today?
Well, I don't know that figure has integrity. I have to question a figure when it's so out of whack with expectation, and it really is a big number. I'd have to see another month or two before I'd really place much credence in that. Maybe it's a cutoff date that made a difference.
Right.
It's really hard to tell from a one period. I will tell you that the expectations, profit expectations from the analysts, Wall Street analysts for this last quarter, we're about to go into profit season.
Right. Yes, Friday
season.
starts on Friday.
Earning expectations are down quite significantly.
Okay.
So if expenditures went up as much as they did, would earnings have expectations have gone down? I don't think so.
Yeah.
But it's a good thing that earning expectations are so well damped because, I think we're going to beat these lowered expectations.
Yeah. Well, I think guidance, as always, is more important even than the actual earnings. That's what I'm going to be paying attention to is the guidance. What are these people saying about?
Well, I'm telling you, guidance is down quite significantly.
The projections or expectations.
Yeah, well, that's guidance from the companies.
Right.
Yes, but guidance and actual compared to expectations,
right,
is really what we're looking at in terms of the current market.
Yes.
So the market is relatively depressed to where it was just before the end of the year.
Mm-hmm.
And I think a lot of that has to do with the expectations being dampened.
Right. So on that note, on another expectation, we'd have the median, we have the inflation expectations survey came out also today. This is a December survey, so this is much closer to reality.
Yeah.
According to the December survey of consumer expectations, median inflation expectations declined across all horizons, falling to 3% from 3.4% on the 1 year ahead horizon and to 2.6% from 3% on the 3 year ahead horizon, and then to 2.5% from 2.7 on the 5 year ahead horizon. So consumers right now are believing that this inflation situation has passed and that things are going to be looking better in not only the immediate future, but long term.
But Randy, I may be ahead of myself, but didn't we get a low print today?
A lower print on expectation?
Got a print today on a report.
On inflation?
Yep.
Well, the only report that are you talking about on the Truflation?
No. Actually, let me see.
CPI is Thursday, PPI is Friday.
Yeah. Hold on. Maybe it is last month's. You know what? I'll have to look it up. But somewhere I saw on the wire a significant reduction in actual to expectation. And what was the basis for it? You know what, I'll have to.
Okay.
But yeah, I think inflation is going to surprise to the downside. Although by and large, there's been a reduction in the number of people who expect, or there's been a tamping of the expectations of a cut
Right.
by the number of cuts by the Federal Reserve. And that's been kind of consistent over the last month. There's been this slow, because of last week's employment report, which is bogus. I mean, I don't see why people regard that as negative. It wasn't as strong as people made out to be because of the revisions, right?
Right.
Am I
Yeah,
missing
the
something?
revisions are crazy, just nuts.
Yeah, yeah. But a lot of the economists are not talking about the revisions.
The
They're
revisions,
talking
I
about the
know.
actual number.
I know. It drives you nuts. It drives you nuts when these people are reporting. I mean, as we've talked about so many times, the more you know about a subject, the more you realize how reporters are just sad. Well, just before we went on air, Fed Governor Michelle Bowman, who is the most hawkish of all the Fed governors, she says she thinks that rates are now sufficiently down that they don't need to go down any further in order to have inflation continue down. So this was a huge dovish statement for her. And maybe she had seen this the inflation expectations report. Maybe she saw that. Maybe she's starting to hear a little bit from the companies out there in terms of what their projections are going to be looking like for the rest of the year. Maybe she's thinking that, as we pointed out the other day, maybe I'm saying third quarter, Larry, I have a hard time seeing how we have a second quarter recession with the jobs level at the levels they are now. But I'm thinking third quarter is maybe going to be where we're going to see this.
Yeah, it's possible. I think it's going to be a little bit sooner. I don't think the jobs report is as good as it looks. I mean, recessions don't need necessarily low jobs. Recessions, there are multiple different kinds of recessions.
Right.
I've spoken about this quite often. Every recession is different, just like unhappy families. But
yes.
So you don't need you can have a recession when you're in the midst of full employment, by the way. So
yes, I know that's happened a couple of times.
Yes.
So on another subject related, we've got DG Summers Markets, MKTS. Anyway, he's on the X, that's his handle. Markets know that in recent times, the yield curve inversion has uninverted via short-term rate cuts, usually with the Fed cutting rates into economic weakness. And the markets that are expecting that again this time. And he says we would need to see 6 cuts to uninvert here. I thought that was a fascinating analysis.
I saw that, yeah.
Yeah. So the 6 cuts that people are projecting would be what it would take to reinvert the yield curve. And we've seen examples before, Larry. I think you and I may have talked about this 4 or 5 months ago, that the reinversion doesn't start until the recession actually is underway.
Yes. But Bowman, the Fed governor, he said that hikes are over, but he's not ready to cut yet.
Yes. Well, they're not. So I saw another one. I didn't pull down the chart because it was so confusing. This chart was impossible to read. I just didn't think I'd bring it up. But there are the Fed's ability to predict their own future interest rates is really bad.
Well, Michelle Bowman's probably the worst.
He's probably the worst.
But she's probably the worst. Yeah, look, time will tell. I mean, from an economic point of view, we talked about a rolling recession.
Right.
I think the rolling recession will be recognized sometime in the second quarter. I think that will lead to a major change in the Fed's position. The Fed can move from bullish to bearish relatively quickly.
Right.
And once they get into a stance, it's hard to take them out of that stance. Hard to get them into the stance,
Yeah.
but it's
Yeah.
really hard to take them out of that stance. So we'll see.
Well, so on to add to the story on CNN today, AJ Oden of JP Morgan says that they are not taking March off the table, but they think more likely June will be the first cut, and that they are expecting 125 basis points. This is JP Morgan is expecting 125 basis points. And he compared what's going to happen afterwards, though, or what's happening now, but won't be felt until after a potential soft landing. They're only expecting a soft landing, but they're expecting this to be compared to the tech impact from the 90s, and that we will be in a go-go situation because of all these productivity gains that we're going to get from tech. And I bet you he's not even including what's going to happen with robots, Larry.
Yeah, I think the impact of robot is not going to happen next year, but you
I
and I
know,
may
I
differ
know, I know this
on
about,
that.
I know this about you.
Yeah, I mean, he's saying the same thing roughly that Bowman is saying, give or take. It's very exciting to have, all these possibilities and try and parse them out and figure out what the moves are. I prefer not to have to do that. I prefer just sticking to my last. But
Yeah.
I must say that there may be some real opportunities.
Well, again, there's so many little elements here that I was able to pull together today to try to take a look at what's really going on, because that's going to be important, I think, to a lot of investors.
Yeah.
The West Texas Intermediate Futures contract for February lost $3 today, or 4%, to settle back at $70.77 a barrel. I'm guessing that's going to continue down, probably back into the 60s tomorrow and the next day. And the Brent futures contract for March also shed $2.64. So the sell-off came for a very specific reason this time.
Saudi.
The Saudis, they lowered their price. They didn't increase their amounts. They didn't decrease their amounts. They lowered their price on Arab light crude by $2 a barrel. The Saudi price cut comes amid persistent market weakness, due in large part to record U.S. crude production and softening demand in China. And OPEC and its allies are cutting their production by 2.2 barrels per day, and it isn't having any effect on the market. So while it's possible that the price reduction was to maintain market share in the face of production cuts, the market is taking it as a clear sign that the economy is slowing. Maybe the landing may not be so soft. Phil Flynn of Price Futures Group wrote on Monday.
Yeah, well, when you can't sell your goods, no matter what the fancy market moves are, you just got to cut your price. So that's what Saudi's facing. They've played it, they've played their aces, and now they're facing a royal flush and they have to fold. The oil market is a tough market because, people trying to sell oil short today could suddenly find the war in the Middle East flares up in the Red Sea and oil goes through the roof. There's so many factors that play on oil outside of economic circumstances. You have to be pretty careful. But this is pointing to a really tough period of time for China. Very tough period of time for China. I think people have begun to realize that Xi is not the genius he was made out to be, that he's just, another dictator. I mean, they've had some terrible rulers. I mean, terrible rulers. Mao was a disaster for the economy and for the people.
Sure.
Deng Xiaoping was a genius, but, Xi is trying to undo everything he did and just doesn't learn. History doesn't teach him.
Yeah, the good news for China is that they now have this quasi-capitalist society, and that's got to help the people over time. Capitalists in China, I know capitalists in China, and they're left alone to a great degree. The small businesses are left alone. So that, I think, was the one thing that she did for the Chinese that was a super positive.
we're not aligned on that. Xi Jinping he's been a disaster for the Chinese economy. I mean, he didn't have a great hand to play with because the real estate situation was disastrous, but he didn't face it head on. Now it's sitting on his lap, and there's little he can do about
Oh,
it.
that's an entirely different subject. Yes, absolutely.
Yeah, and he's been very combative, and I'm not sure that that's going to play well for him. I think he played this very differently. Aligning with Russia is like an old, Cold War thing, pre the Russia-Chinese bust up. It didn't buy them anything then. It's not going to buy them anything now, in my humble opinion. So we'll see. I mean, I'm not a fan of Xi Jinping, and
Oh, no. I didn't want to imply in any way that I'm a fan. Believe me. Well, let's take a look at the markets, Larry. We have got Tesla is up a little tiny bit in the aftermarket after being up 1.25% today. So as you mentioned at the outset, it was a good day. Now, Tesla did not do as well as the rest of the Mag 7, did not do as well even as the NASDAQ. And I do believe that was the press reporting on the drug situation that kept it from doing as well as it could have done today. But at least we're positive, and maybe this will continue on tomorrow. We have got, just a second, I'm so sorry to be slow here. So the bonds in the aftermarket have popped back up over 4%. The 10-year is back over 4% at 4.019.
Good for me.
Good for you. Okay. And again, the shorter bonds are higher up. The yields are up even more than the long yield.
Really good time to buy bonds.
Very good time to buy bonds. Let's see.
It was a better time last, 3 months ago, but this is still a good time.
This is breaking news right now in front of my face. Samsung expects their profits to fall 35% in the fourth quarter of 2023, missing expectations by a bunch. That could impact the stock market tomorrow.
Yeah, and it's going to impact Apple. What's going to happen to Apple this earnings round?
Yeah, it'll be super interesting. Okay, we've got let's see here. So that was bonds. We've got oil, as we know, going down. It's flat in the after, both of them, Brent and Texas Intermediate. Natural gas, another 2% after hours. Down. I mean, down another 2%.
No, I get it. I get
Yeah,
it.
right. Yeah, I know. Holy mackerel. Gold, about flat, $5 up, $5 up. Silver, also very close to flat. Copper, also, up 0.39% after hours.
Yeah, copper's down a very significant amount over the last 6 months, 3 to 6 months, and that bodes ill. Really just bodes ill.
And then we got the dollar about flat. We've got the Bitcoin today. I guess everybody thinks that the news is going to be good on Wednesday because it now up 2,700 points today to 46.9. So
It's only 4%.
That's only 6% actually, 6%.
Oh, sorry, 6%. You're right. Sorry.
But that's still that's
a big move. Yeah,
that's a big move. Yeah. And then we've got the Dow down 11%. We've got S&P down 0.08%. I'm sorry, I said 11%. I didn't mean that, right?
No.
0.11%. S&P down 0.08%, and the NASDAQ future down 0.1%. So actually, the three of them are down pretty close in percentage mark. And if you want that in numbers, that is Dow down 42, S&P down 4, and NASDAQ down 17. So not really reflecting the news out of Samsung yet, but it was just breaking. So it'll be interesting to see where the pre-market is in an hour if it gets.
What is Apple looking like? What is Apple doing?
What is Apple doing in the after hours? Okay, let's look that one up. We have got Apple in the after hours down 0.19%.
Yeah, I don't know that Apple is sensitive to exactly whatever hit Samsung. It'd be interesting to know what hit Samsung, but it could be an indication. I mean, there are there are ripples in the market, you know, that phone business is really reaching a saturation.
I see. I see. Yeah. Yeah. Well, yeah. And of course, they aren't as dependent on the hardware anymore because it's that all that software that really drives their profits now.
Yeah, but they have these waves, you know, these
Yeah.
waves of renewal, and you know, it drives quite a lot of revenue.
Well, for the very first time ever, I went 3 years instead of two. So, you know, I was
I think a lot
automatic
of
for two
people do.
years.
Yeah, I
Yeah.
think a lot of people are going that route.
Yeah.
You know, I mean, I did upgrade my Pixel Android last year, but you know, there's no FOMO left in that market because the incremental improvements are so minor.
Yeah. Yeah.
I
If you're
mean,
a camera buff, maybe, you know.
yeah, but even the cameras, you know, how much better can you, well, you know,
Yeah.
yeah, well,
Well, any last thoughts today, Larry, on Tesla or on the market or on the economy before we say adieu?
no, I think this is earnings season. I think earnings season is not going to disappoint. I think it's going to be better than the pundits will make out. And I think that's the good news for me for the day. And that's largely because the pundits have scaled back their
I see. Yeah.
expectations.
Yeah.
You know, we're going to have to start looking at Tesla's earnings. I think they're going to be okay. A lot of people are talking them down, but I think they're going to be okay. I think energy is going to surprise to the high side. I think services are going to surprise to the high side. I think cars are not going to be as bad as they make out. So this is just my sort of opening shot on earnings for Tesla. So yeah, I'm looking forward to the rest of the week and the rest of the month.
All right. Well, Larry, if we don't see you before, we'll see you for Good News Friday. But I am kind of hoping to see you before because I think we're putting together some more stuff about robots.
Yeah, we are. And you know, that space is moving so quickly, you know, everybody's looking at me and say, you're wrong. I don't think I'm wrong yet, but you know, it's very exciting what's coming. It's no doubt it's coming. There's no doubt it's coming.
Just
I
which
mean, none
month?
at all.
Yes.
It's
Which
just,
month, which year is coming? Yeah.
and which vendors. I mean,
Yeah.
it's very exciting what's happening. Very exciting because, you know, I'll give it all away. The thesis of this long paper, I've done a long study into these robots. The thesis is very simple. The only one with everything is Tesla.
Yes. Yes.
They own every
Yeah.
piece that's necessary.
Right.
All the others have to partner at one point or another, or have to invent something new at one portion of their business. The only guy that covers the beachhead is Tesla.
Yeah. Yeah. All right. Well, there's a little bit of a hint of what's to come. Larry, as always, thank you for bringing the good news to this channel. It's been great talking to all of you out there, as always. Larry, thanks again. What happened? Oh, here we go.